Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo.live video for the 19th of March, 2020. And we're kind of just getting a checkup on the markets here. A lot of things jumped out at us in today's trading session. Number one, volatility came down a little bit, maybe not as much as you would think. It's still at a VIX print of 72. And today was a range day, chop day, in the markets. Strongest was the Russell, and that's not been the case recently, but it was the case today. Weakest up here was the S&P, and the Nasdaq was one of the strongest outside of the small cap Russell. But the thing jumping off your chart like a sore thumb is crude oil. Crude oil was up at one point today, 25%, which is about a $5 move off of $20. And you can see it bouncing here. It's not that impressive, honestly, but it's off this 20 print, and $5 up off of 20 happens to be about 25%. So that's where we are in crude oil. So just keeping in mind, even though this day doesn't look that stellar, yesterday was about a 10, 15, or higher percent down day. But with stocks as low as they are, or crude priced as low as it was, $5 is good recovery. It just happens to be a big percent gain. So we'll talk about that in today's session or today's video. And also bonds had that's some volatility there. Bonds had a bounce off of their 200-day simple moving average. This is TLT, and that was a 140 per share level. And so remember, Don covered the shorts in bonds yesterday and took that off into a profit because today was a rally. ZN is your 10-year Treasury note, and that also is in a stellar pullback or retracement. Even though this went straight up, we were talking about the bullish plays in bonds, right? We had Don and others had short positions into the top here, a little early, but that's how the markets work. You don't call the top, you don't call the exact day. You position ahead of a reversal. And so getting short, getting protected, getting puts worked very well as that which went parabolic came off. So that's where the bond market is at the moment. We can take a look also at TNX, which is your Treasury yield. And that again led to a deep sell-off. And again, the Fed cut rates to zero effectively. It's not going to directly affect the 10-year note. It only affects the Fed funds rate. So that's a key look on the bond market. And this is just that pivot, bounce, V-spike, or this panic buying. And this is yield. So when the yields go down, bond prices go up. When yields recover, bond prices go down. And that print right there is not 4. It's actually 0.4%. 1% or 10 is 1%, and 0.8, 0.6, 0.4, etc. 2, which occurred not that long ago, is a 2% print in the 10-year Treasury yield. You can trade that with TLT, which includes the longer-term dated bonds, or IEF, which is closer to the 10-year note. It's roughly 7 to 10-year ETF. So these are ways to trade options or spreads or just even intraday tactics, which normally isn't possible or isn't recommended in bond products. But with volatility this high and pullbacks this deep, you can certainly trade intraday tactics on smaller ETF products than just the bond market. Back to our VIX. Remember, it's been up persistently, but it's not been up every single day. Markets don't go up or down every single day. We've had the retracements, big up day, big down day, big up day, big down day, so on and so forth. So given that today was a, roughly speaking, slight up day in the markets, more range or flat, given the volatility, bonds and the volatility index came down. And then bonds came up as well. We've been talking about stocks to buy. That was Thursday night's video. And we'll take a look at the similar logic. So remember, this is a watch list. We can go inside the scan. Here's how this is done typically. It is a scan custom. It's for me at least, it's going to be a watch list scan. We'll talk about this. We'll load a scan query, and that's going to be public. Mine is public. If not, let us know. But it's new yearly highs, new yearly lows. And I just put that in the S&P 500, and that's what the data comes up. So from that, it's the S&P 500 stocks that are making new 52-week, in this case, highs, and we can take a look at those. And they are including, well, we had Regeneron, that's a name, making higher highs. Citrix, we had talked about that earlier. and that's in information technology, teleconferencing, and video. If workers that work at home, they have to use video conferencing and teleconferencing and telecommuting. So that's going to be a stock in focus. And of course, healthcare in general, because they're looking for the vaccine. If not the vaccine, they're looking for treatment. And healthcare stocks are going to, in general, not all of them, benefit from news about this coronavirus. So that's part of it too. We also talked about Kroger Foods, which is a grocery store, Hormel. We talked about Campbell's Soup, and of course anything else that would go within the consumer staples type of name. But in today's session, we can also flip this from a watch list, and I take it from the S&P 500. Just go watch list query and then put that over to a watch list tool, and these are the same 3 stocks. And the benefit of that is I can take a look at these from a watch list perspective and call the chart and look for opportunities. So Regeneron was, we had it on Tuesday, so we stock strong, getting stronger. We like to buy on pullbacks or retracements. So Regeneron has generated a new high. A little bit volatile on the intraday session, but still want to buy pullbacks to rising averages or just pullbacks into strong stocks. Gilead is another one, but this again is some volatility. And we talked about Citrix Systems. That's just probably a little too volatile for anybody here. And again, discussed on Tuesday, a little bit higher. And this may actually be an intraday type of candidate for traders there. So this hourly chart is seen on the right, and the daily chart is here, or the 5-minute chart now, but normally the daily chart. We also discussed Kroger, and Kroger as well, discussed on Tuesday, is now up $3 or so from that discussion. And of course, Campbell's Soup, CPB, which is Campbell's Soup. You're going to have to buy soup, and remember, the stocks are a quarantine. There's Campbell's Soup. It also pushed up to a high, but then just recently sold off. Not all names are going to be perfect in terms of quarantine stocks. You're looking for things to buy if the market rebounds, things that are going to be strong, getting stronger, and these uptrend names tend to be good candidates. The opposite is true. We can also take a look at stocks going down, getting weaker, and instead of new yearly highs, we'll take a look at the new yearly lows, which is right there. And there just are too many to name. But I want to call your attention to a couple of them and this new yearly lows, just so I can sort this and have it easier seen on the video. This is that same list. And they're stocks that are making new yearly lows, new 52-week lows, and we're sorting that by percent change. And that's kind of interesting. So these would be names that were beaten up or sold majorly on the most recent sell swing. Just like crude oil, 24% in one day for Darden Restaurants. That's some of the popular names. And Simon Property Group, there are some oil names, a few financial names. There's FedEx, which is interesting. I find this ironic. Live Nation Entertainment, that's a stock that's getting hit. We're certainly talking cruise ships and airlines, but this company for entertainment concert venues called Live Nation, if you can't go to parks, if you can't go to concerts, if you can't go to downtown arenas and the things that they do, that's just going to be particularly hit hard. And of course, hotels, Kohl's is a retail name, Under Armour is a brand of type of sporting gear retail, Wynn Resorts, and the like. So these are not stocks that are getting decimated. They're stocks that rallied quite strongly today in today's session. But again, that which has been beaten up, here's Wynn Resorts, so I'll kind of take this off. And you can see Wynn Resorts has been in a major downtrend, fallen from 140 per share to 40. So when the stock trades up about $4 from 40, that winds up being a decent percent gain, roughly 10%. And that's showing up on our percent list. But one of the biggest stocks today that's been in focus and been discussed is Darden. Again, a type of retail, specifically a restaurant name. This is a strong stock that was getting stronger until it was hit with news. And that's what the benefit of trading options. You do not know if you have a long-term duration position or a long-term space or play in a particular stock sector or group. You don't know when something major is going to come along and affect that stock for better or worse. This is just happens to be the worst you can possibly get. It sure seems like if you're a restaurant and you are forced to close for weeks and maybe months, your stock is going to take a hit, Downtrodden being one of them. So it has fallen from 122 down to 30. But again, you can see the reversal works best on a daily chart to look at. Even here on the hourly chart, well, they just had a earnings call. So they reported, right? That's an earnings type of play. Earnings are still happening in this environment. So 0 means they just had earnings today. This is your days to earnings column. So just keep this in mind. This stock traded from roughly 30, you see it here, to 44, a gain of about $8, which may not seem like a lot on a normal session. Over here it was gaining or losing $8, but it just happens to show up on a percent list of a stock gaining a big percent in today's session. So others would include Schlumberger, other financial groups, Fifth Third Bank, FedEx, and others, including Kohl's, Dollar Tree. There's MGM Resorts. It had a pretty stellar bounce today. But we don't really start. And then Carnival Corp, Carnival Cruise Ships. We've been talking about this as well. These stocks are in focus, but when they bounce, they can bounce hard. And that's dangerous for the short sellers. And again, why we like to use options, but in something this volatile, you might just want to stand aside and try to trade something that is not in focus. That's what the second order effects are, or stocks that are around. Right? You're talking cruise ships and airlines are the heart of this virus, and now we're talking restaurant and retail names being forced to close. Those are in focus, but there are other stocks that are second order effects that you might want to be looking at. And those would include retail names or defensive names or staple names or even health care. But again, that which is weak does get weaker. But when something gets pushed so low, and the lesson from crude oil plays into this session as well, even a small gain, I'm not saying $4 is small, but in the grand scheme of things, $4 is not much when the oil or stock is trading at a higher level. That's an enormous percent gain or loss when a stock is down at beaten down levels. So keep that in mind for intraday tactics or, of course, swing trades. Volatility is still here. VIX is still above 72 or above the 70 print, and markets are still not out of the woods yet. But you can always manage positions with options, with spreads, and of course playing in these volatile environments. Things will return to normal, but we're not just there yet. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for March 19th, 2020.